The panic is no longer a whisper in the dark corners of financial forums or a fringe theory shared among gold bugs. It has officially reached the highest corridors of power in Washington District of Columbia. For decades, we have been told that silver is a relic of the past, a mere byproduct of industrial mining with no strategic value in a digital world. But the actions of the United States government in late 2025 have shattered that illusion forever. While the mainstream media was busy distracting the public with retail sales figures and the latest tech stock earnings, the Department of Defense was quietly signing a death warrant for the era of cheap, abundant silver. On December 15, 2025, a massive strategic maneuver took place that should have sent shockwaves through every brokerage account in the world. The United States government, through the Department of Defense and the Department of Commerce, finalized a deal to spend $7.4 billion. This capital is not for a new aircraft carrier or a social program. It is dedicated to a single, desperate goal: securing the physical supply of critical minerals, with silver sitting at the very top of the list. They have partnered with Korea Zinc to build a massive processing facility in Clarksville, Tennessee. To understand the gravity of this move, you must realize that this is the first major non-ferrous metal smelter built on American soil since the 1970s. For 50 years, the United States was content to outsource its dirty work to China and other nations. We exported raw rocks and imported finished high-purity silver. That era of complacency is over because the government has finally realized they cannot print the silver required for national survival. The most chilling aspect of this $7.4 billion investment is not just the price tag, but the structure of the deal. This is not a loan or a simple subsidy. The Pentagon is taking a 40% equity stake in the project. Let that sink in. The United States military is effectively nationalizing the midstream production of silver and other critical minerals. They are not waiting for the free market to provide. They are not waiting for the New York Commodity Exchange to settle contracts. They are stepping onto the factory floor and claiming 40% of the output before it ever reaches the open market. This is a clear signal that the people who run the world are terrified of running out of the very material that powers their missiles, their satellites, and their high-tech weaponry. We are standing at a historic crossroads. On one side, you have the paper price in New York, which remains suppressed by bank algorithms. On the other side, you have the physical reality of a $7 billion fortress being built in Tennessee to hoard every ounce possible. As of today, January 5th, 2026, the mask has slipped. The government is no longer pretending that silver is just another commodity. They are treating it like a strategic asset of war. The squeeze is no longer a retail movement. It has become a matter of national security. If you are still holding paper claims, you are betting against the House, and the House has just decided to lock the doors to the vault. To truly understand why the United States government is committing $7.4 billion to a single site in Tennessee, we must look past the industrial terminology. This facility in Clarksville is not just a factory. It is a geopolitical statement of independence. For over half a century, the United States allowed its domestic smelting capacity to wither and die. By the year 2020, the nation had become dangerously dependent on foreign adversaries for the high-purity silver and zinc required for its industrial base. This was a calculated risk taken in the name of globalization. But in the reality of 2026, that calculation has failed. The Tennessee project is the centerpiece of a new strategy: the creation of a North American mineral fortress. The choice of Korea Zinc as a partner is a move of surgical precision. Korea Zinc is not a typical mining firm. They are widely recognized as one of the most technologically advanced refiners of non-ferrous metals on the planet. By bringing their proprietary technology to American soil, the Department of Defense is ensuring that the United States can process complex concentrates that other smelters simply cannot handle. This facility is designed to process 1,100,000 tons of raw material annually, but the real story is in the output. While the headlines focus on zinc, the Clarksville smelter is engineered to extract 13 different metals. 11 of these are classified as critical minerals by the United States Geological Survey. Among these 13 metals, silver is the crown jewel that makes the entire economic engine of the military viable. In modern warfare, silver is not an ornament. It is a fundamental component of every high-performance circuit, every infrared sensor, and every guidance system in the American arsenal. By building this smelter, the government is admitting that they can no longer trust the global supply chain. They have seen the fragility of the maritime routes. They have watched China tighten its grip on the processing of raw materials. The Clarksville facility is meant to break that grip. It is an acknowledgement that in a world of rising geopolitical tensions, the only supply chain you can trust is the one that sits within your own borders, protected by your own laws. Furthermore, the location of Tennessee is strategic. It sits at the heart of the American logistics network, with direct access to the Mississippi River and major rail lines. This allows the United States to intercept raw silver ore coming from mines in Mexico, Peru, and Bolivia before it can ever be loaded onto a ship bound for Shanghai. The Pentagon is effectively creating a gravity well for silver in the Western Hemisphere. They are telling the mining companies of Latin America that there is now a massive, government-backed buyer in Tennessee that is ready to take every ounce of concentrate they can produce. This is the beginning of the end for the Trans-Pacific metal trade. The Tennessee Fortress is being built to ensure that when the next major conflict begins, the United States will have the physical atoms of silver necessary to fight, regardless of what happens in the global markets. The most startling detail of the $7.4 billion Clarksville deal is a figure that has been largely overlooked by the general public: the 40% equity stake. When the Department of Defense takes a 40% ownership in a private industrial project, the rules of the free market no longer apply. This is a soft form of nationalization, a strategic seizure of production capacity that mirrors the actions taken during the Great War efforts of the 20th century. By owning nearly half of the facility, the Pentagon is not just a customer waiting in line for silver bars, they are the owner of the line itself. This 40% stake means that a massive portion of the silver, zinc, and indium produced in Tennessee will never see the light of day on the open market. It will never be offered to retail investors, and it will certainly not be used to satisfy the delivery demands of the New York Commodity Exchange. Instead, these metals will move through a closed-loop system, flowing directly from the smelter into the strategic stockpiles controlled by the military. The government is effectively removing supply from the commercial world before it is even refined. This is the ultimate hedge against a global shortage. They are ensuring that even if the rest of the world is fighting over the last remaining ounces of silver, the United States military will have its 40% guaranteed by law and by force. To understand why this is happening now, we must look at the inventory levels of the United States. For years, the strategic national stockpile has been depleted, sold off during times of peace to balance budgets or keep prices low. But as we enter 2026, the realization has set in that you cannot fight a high-tech war with a digital currency. You need the physical element 47. Every Tomahawk missile contains approximately 15 kilograms of silver. Every F-35 fighter jet is packed with miles of silver-coated wiring to prevent oxidation and ensure perfect conductivity. The Pentagon looked at their projected needs for 2027 and 2028, and they saw a catastrophic deficit. They realized that if they continued to rely on the open market, they would be outbid by the Chinese industrial machine or blocked by trade embargoes. This equity stake is the death of the free market for strategic metals. It tells us that the United States government no longer believes the global price of silver is accurate or sustainable. If they believed the price would stay low, they would simply buy silver as needed with their unlimited printing press. By investing billions into the hardware of production, they are admitting that the paper price is a lie and that the only true value lies in the physical ownership of the asset. They are front-running the entire world, using taxpayer billions to secure their own supply while telling the public that everything is under control. For the silver investor, this is the loudest alarm bell in history. When the government starts owning the factories, you know the era of abundance is over. While Washington attempts to build a physical wall around its supply chain in Tennessee, the global pricing mechanism is undergoing a violent transformation in the East. For decades, the world looked to the COMEX in New York and the London Bullion Market Association to determine what an ounce of silver was worth. But on this day, January 5th, 2026, that Western monopoly has shattered. The center of gravity for price discovery has shifted to the Shanghai Futures Exchange, and the numbers appearing on Asian screens are sending a clear message of defiance to the paper traders in the West. The current data from the Shanghai Close is staggering. The price of silver in the Chinese market has hit 18,420 yuan per kilogram. When you do the math, converting kilograms to troy ounces and yuan to US dollars at the current exchange rate of 7.1, you arrive at a price of approximately $82 per ounce. At the exact same moment, the paper price on the COMEX is struggling to stay at $75. This is not a minor fluctuation. This is a $7 spread, a massive arbitrage gap that represents a complete breakdown of the global financial plumbing. In a healthy market, a $7 difference between two major exchanges would be closed in seconds by high-frequency traders. They would buy in New York and sell in Shanghai until the price is aligned. But that is not happening. The gap is not closing, it is widening. This persistence proves that the silver in New York is not truly available. It is locked in contracts, encumbered by leases, or simply does not exist in the quantities required to satisfy the physical demand in Asia. Shanghai has looked at the Western paper price and declared it a fiction. They are willing to pay a 10% premium because they aren't trading digital promises. They are trading physical bars for their massive solar and semiconductor industries. This $82 reality is the primary driver behind the Lo Nam Gok's panic. They are watching the East drain the West of its lifeblood. Every day that the Shanghai price remains higher than New York, a giant vacuum is created. Physical silver is being pulled out of Western vaults, loaded onto planes, and shipped to China, where it can be sold for an immediate $7 profit. The United States government realizes that if they do not intervene, the COMEX vaults will be empty by the time the Clarksville smelter is finished. The breakout in Shanghai is the first shot of a currency war where the weapon is not a printing press, but the physical atom of silver. The East has realized that he who holds the metal makes the rules, and right now, the rules are being written in yuan, not dollars. The $7 gap between New York and Shanghai is not just a statistical anomaly, it is a financial black hole that is vacuuming physical silver out of the Western Hemisphere. In the world of global commodities, silver always flows to the highest bidder. When the price in the East sits consistently higher than the price in the West, it creates what economists call an arbitrage vacuum. For a bullion dealer or a large industrial refinery, the logic is undeniable. If you can buy silver in London or New York for $75 and sell it in Shanghai for $82, you will do so as fast as the ships and planes can carry it. This is exactly what we are witnessing in early 2026. The London Bullion Market Association and the COMEX registered vaults are reporting massive outflows that have not been seen in decades. This is the Great Silver Drain. It is a one-way river of wealth moving from the vaults of the establishment into the industrial heart of China. The Western paper markets were designed to control the price through the trading of digital contracts, but those contracts are now being ignored by the physical reality of the market. You cannot stop a physical drain with a paper dam. Every ounce that leaves a Western vault today is an ounce that will never return, especially now that China has implemented strict export controls on refined metals. The implications for the United States are catastrophic. The military and industrial complex requires a constant flow of silver to function, yet the very mechanism meant to ensure that supply the free market is instead facilitating its departure. This explains why the Department of Defense is no longer relying on the COMEX. They have seen the data. They know that the reported inventory in the West is often rehypothecated, meaning multiple people have a paper claim to the same physical bar. When the music stops and everyone wants their metal at once, the vacuum will have already emptied the room. The arbitrage vacuum is also destroying the credibility of the United States dollar. When a foreign exchange refuses to accept the Western price, they are essentially refusing to accept the valuation set by the dollar-based financial system. By paying $82 in yuan, China is telling the world that the yuan has more purchasing power for real assets than the dollar does. This is why the $7.4 billion investment in Tennessee is so urgent. The United States is trying to build its own vacuum, a gravitational force in Clarksville that can pull silver from Latin America and trap it within North American borders. They are fighting a war of physics against a war of finance, and they are doing it because they know the paper market is already empty. To truly grasp the magnitude of the shift occurring in the silver market, we must look at the involvement of the most powerful bank on Wall Street, J.P. Morgan. For over a decade, the silver community has viewed J.P. Morgan as the primary architect of the paper suppression scheme. They have been fined hundreds of millions of dollars for spoofing and manipulating the precious metals markets. They were the masters of the short position, using their massive balance sheet to keep the price of silver contained within a narrow range. But in 2026, the predator has changed its stripes. J.P. Morgan is no longer betting against silver. They are positioning themselves to own the infrastructure that controls it. J.P. Morgan is the lead entity structuring the financing for the $7.4 billion Clarksville smelter. This is a profound pivot. Why would the world's biggest silver short seller suddenly fund the largest physical production facility in American history? The answer is simple. They know the paper game is over. They have realized that in a world of physical shortages and $82 Shanghai silver, a paper short position is a liability that could lead to total insolvency. By financing this smelter, J.P. Morgan is building their own escape pod. They are moving from the world of digital derivatives to the world of physical atoms. This move is a betrayal of the very system they helped create. While J.P. Morgan's retail analysts may still be issuing reports telling the public to be cautious about silver at $75, their commercial banking division is writing checks to ensure they have a seat at the table in Tennessee. They are not just financing a factory, they are securing a toll booth. By sitting in the middle of the deal between the Department of Defense and Korea Zinc, J.P. Morgan ensures they will have first access to the physical flow of metal. They are preparing for a future where the COMEX price is irrelevant, and the only thing that matters is who controls the refinery. They are effectively reshoring their business model. Instead of relying on the London vaults, which are being drained by the day, or Chinese refineries, which are now closed to the West, They are building a fortress in America where they can process and store metal under the protection of the United States military. This is the ultimate insider trade. JP Morgan is telling the world to sell their paper silver while they quietly buy the factory. They have seen the writing on the wall. The era of price manipulation through paper is dying, and the era of resource nationalism has begun. If the biggest short in history is now the biggest financier of physical production, you must ask yourself what they know that you do not. The Clarksville smelter is not just a domestic project. It is a masterstroke of geopolitical interdiction. To understand this, we must look at the map of global silver production. The vast majority of the world's silver comes from the mountains of Mexico, Peru, Chile, and Bolivia. Historically, these nations have been the primary suppliers for the global market. However, a dangerous trend has emerged over the last 2 decades. Lacking their own high-tech processing facilities, these Latin American nations have increasingly shipped their raw concentrates across the Pacific to China. China has spent years building a near monopoly on the midstream refining process. They buy the raw dirt from Peru, refine it in Shanghai, and then sell the high-purity silver back to the rest of the world at a premium. The United States realized that as long as this cycle continued, they were effectively subsidizing the industrial growth of their greatest rival. The Tennessee smelter is designed to break this cycle. By building a world-class facility in the American South, the United States is creating a gravitational pull that is stronger than China's. The Pentagon and JP Morgan are essentially rebuilding the Monroe Doctrine through industrial infrastructure. They are telling the mining ministers in Lima and Mexico City that they no longer need to send their ships to Shanghai. Instead, they can send their ore north, through the Gulf of Mexico and up the Mississippi River to Tennessee. This shortens the supply chain, reduces transport costs, and most importantly, keeps the strategic metal within the Western Hemisphere. This is why some analysts are calling this project bigger than Venezuela. While Venezuela has oil, the mineral wealth of the entire Andean region is what powers the modern world. This strategy of interdiction is a direct challenge to China's Belt and Road Initiative. The United States is no longer asking for cooperation. They are competing for the physical flow of atoms. If the Clarksville facility can successfully intercept the silver concentrates from Latin America, it will starve the Chinese smelters of the raw material they need to dominate the solar and electronics markets. We are witnessing the beginning of a resource blockade. The goal is to create a closed-loop system. Latin American mines to Tennessee, smelters to American defense factories. In this new world order, the United States is determined to ensure that not a single ounce of Western silver makes its way to an Eastern vault. The $7.4 billion investment by the Pentagon and the involvement of JP Morgan are the final confirmation of a reality we have long suspected. The paper silver market is walking dead. For over 50 years, the global price of silver has been determined by the trading of futures contracts on the COMEX and the London Bullion Market Association. These are markets where billions of ounces are traded every single day, yet only a tiny fraction of that silver ever exists in physical form. It is a system built on trust and the assumption that not everyone will ask for their metal at the same time. But that trust has evaporated. The Clarksville Smelter Project is the death certificate for this fractional reserve system. Think about the logic required for the Department of Defense to take this step. If a paper contract was truly as good as physical metal, the government would not need to spend $7 billion to build a factory. They have an unlimited printing press. They could simply buy every futures contract on the board and demand delivery. The fact that they are instead pouring concrete and steel into the ground in Tennessee proves they know the paper market is a mirage. They know that when the crisis hits, you cannot put a digital promise into the guidance system of a hypersonic missile. You need the physical element 47. We are now entering the era of the great decoupling. In a ghost market, the price on the screen becomes disconnected from the reality on the ground. We are seeing this with the $82 price in Shanghai versus the $75 price in New York. The paper price is set by banks trading digital claims to one another to manage their balance sheets. The real price is set by the Pentagon and industrial giants who are bypassing the exchanges entirely to secure off-take agreements directly from the source. When the government owns 40% of the production, that silver never even enters the paper pricing system. It is removed from the equation before the speculators can even see it. For the individual investor, the message is clear. If you are holding an unallocated silver account, a bank certificate, or an exchange-traded fund that does not allow for physical delivery, you are holding a ghost. You are holding a donation receipt to the banking system. When the physical shortage reaches its peak, these paper claims will likely be settled in cash at a price that bears no resemblance to the cost of obtaining a real silver bar. The big players, from the Pentagon to JP Morgan, are cashing out of the paper casino and moving into physical infrastructure. They are leaving the retail public behind in a market that is increasingly devoid of its underlying asset. Physical possession is no longer just an investment strategy. It is the only way to ensure you actually own what you paid for. To understand why the silver market is entering a state of permanent scarcity, we must look at the two industries that have created an unbreakable chokehold on global supply: green energy and high-tech defense. We are no longer living in a world where silver is primarily used for jewelry or silverware. In 2026, silver has become the most essential industrial metal of the century. The dual pressure from the solar industry and the military-industrial complex is consuming silver faster than the Earth can yield it, and the Clarksville smelter is a direct response to this looming exhaustion. Let us look at the solar reality. China currently controls over 80% of the world's solar panel manufacturing. Each of these panels requires a significant amount of silver paste for its conductive cells. As the world pushes for a total energy transition, the demand for silver in the photovoltaic sector has exploded. Recent data suggests that the solar industry alone is now consuming over 20% of the total annual silver mine production. This is not a cyclical trend, it is a structural shift. The world is attempting to replace oil with silver, and there simply isn't enough of it to go around. When the United States looks at its own green energy goals, they realize they are at the mercy of Chinese supply chains. Simultaneously, the defense sector has entered a new arms race. Modern warfare is defined by precision and speed. Whether it is the guidance systems of Tomahawk missiles, the sensors on the F-35, or the shielding for satellite communications, silver is the irreplaceable conductor. Unlike other industrial applications, the military cannot compromise on quality. They need the highest purity silver to ensure that their electronics do not fail under the extreme conditions of combat. The Pentagon's decision to take a 40% stake in the Tennessee facility is an admission that they are in a life-or-death competition with the solar industry for the same limited pool of metal. This is the definition of a chokehold. On one side, you have the civilian demand for a green future, and on the other, you have the military demand for national security. Neither side can afford to blink. As the Clarksville smelter comes online, it will prioritize these two sectors above all else. This means the leftover silver for the retail investment market will become increasingly rare. We are moving toward a tiered market where the government and strategic industries take their share first, and the rest of the world fights over the crumbs. The silver in your hand is not just a hedge against inflation. It is the very material that the superpowers are willing to stop the world's energy transition to secure. The evidence is now undeniable, and the conclusion is unavoidable. We are witnessing the end of the globalist, paper-driven silver market and the birth of a new era of resource nationalism. When the United States government writes a check for $7.4 billion to build a metal fortress in Tennessee, they are telling you that the game has changed forever. They are no longer content to let the invisible hand of the market manage their strategic needs. They are moving in with the heavy hand of the state to lock down what remains of the physical supply before the door slams shut. Your strategy in this environment must be simple. Stop listening to what they say and start watching what they do. Do not listen to the Federal Reserve officials when they claim that inflation is a thing of the past. Do not listen to the Treasury Secretary when she speaks about the resilience of the global trade system. Instead, look at the concrete being poured in Clarksville. Look at the 40% equity stake the Pentagon has seized. Look at the $82 reality screaming from the screens in Shanghai. These are the only facts that matter in a world of mounting debt and evaporating trust. The government is prepping for a future of scarcity, and you would be wise to do the same. The connection between the Department of Defense and high-quality private mints like the Scottsdale Mint is the final piece of the puzzle for the individual investor. When you buy physical bullion today, you are not just purchasing a commodity. You are securing military-grade collateral. You are holding the exact same material that the most powerful military on Earth is currently fighting to control. This gives your investment a floor that no paper manipulation can ever break. As the supply chain continues to fracture and the arbitrage vacuum drains the Western vaults, the premium on physical silver will only go higher. The window to acquire this metal at anything close to reasonable prices is closing rapidly. This is the final verdict for January 5th, 2026. The shortage is real, the panic has reached the highest levels of government, and the squeeze is now inevitable. The big players have already made their move. JP Morgan has pivoted. The Pentagon has taken its stake. China has raised the price. Now it is your turn to act. You do not need to build a $7 billion smelter to protect your family's future, but you do need to hold the physical atoms that the world is running out of. Be right, be patient, and stay focused on the physical truth. This is the moment history is made. Hold the line. This is John A.G. from Currency Archive. Thank you for watching.